And I've been asked again to point out that instead of waiting till the end of the meeting to collect information as to, or feedback as regarding the different sessions, there is a survey. You can either fill out one of these pieces of paper, or you can, go access it through the app and do your evaluation there. This session is back to basics. And before we get started, I know that by the look on your faces, the burning question is, are Sean and Aaron related in some fashion? But let me say, they're not. They're fully independent of one another. So anyway, Back to Basics is a program that is, the objective is to be geared toward people that are new to core facilities and people that have actually been in core facilities for a while but need some sort of remediation. We've been buried into these environs, for so long, we lose sight, we lose the 30,000-foot view. So, sometimes it's a good idea to kind of take a step back and just kind of hover over things and just take a look. So what we're going to do, basically, is we're going to deconstruct what a core facility is and look at the pieces. And one of the things that really comes to light here is that there is a gap between, the science end of things and the business end of things. And there's always this sort of contention between administration and the scientists. If you look at this quote by Thomas Edison, that kind of says it all. The scientists say, we're trying to get things done here, just leave us alone. That's really, what has happened. It's almost like the relationship between a teenager and their parents. The parents, want to communicate with the teenager. Hello, can I come in your room? And, the teenager, go away, I hate you. Leave me alone, you don't understand me. And that's really kind of the relationship in some instances that we look at here. So what we want to try and do is close that gap and, create a relationship between the administrators and the scientists. And to do that, one, you have to have an understanding. The science side needs to understand the administration's needs, and vice versa, the administration needs to understand the needs of the science and of the core facility so they can do what they need to do. And how do we do that? We communicate with one another. We talk to one another. And that doesn't mean that one side goes in and starts pounding their fist and saying, I demand it. There are effective ways of communication, so there has to be a way of developing effective communication between the two entities. And then, of course, what that does is creates an environment of cooperation, and that's really the ultimate goal, is to really have an air of cooperation. The relationship can be illustrated by this particular quote, and that is, our friendship is equal parts irritation and cooperation. And I think that people can kind of understand that. I don't know, does anybody know who Ransom Riggs is? Well, Ransom Riggs is a writer, and he wrote a book, the name of Mrs. Peregrine's Home for Peculiar Children. And I kind of get the feeling that sometimes we all feel like we're in that home for peculiar children and trying to deal with, a variety of issues and things. So I just thought that was sort of an appropriate sort of depiction of the relationships that we have with, sometimes we're the inmate and sometimes we're, thrust in the middle of all the other inmates. So what I want to do is we want to take and look at each one of these pieces. Like I said, we're going to kind of deconstruct. And at the center of this are the two driving forces of a core facility. The driving forces are the science, that's on the front end. And really, that's really what's very important. And behind that, on the back end, is the compliance. We are, subject to, federal regulations because, our institutions receive federal dollars, and as a result, they expect us to put in place certain policies and safeguards to protect those federal dollars and to be spent appropriately. So what we're going to do is we're going to put all those pieces together and just see how, like I said, put together a final package so you get a better objective view of what a core facility is. So for part one, which is this morning, and part two will be this afternoon. Part one, we have Justine Karungi, who is from the University of Kansas Medical Center. She's going to be talking about how to start a core and, creating a business plan and what goes into it. We have Aaron Rosen from Northwestern, budgets and finance and rate settings and things of that nature. And lastly, we have Sean Frankowiak from Johns Hopkins University School of Medicine. It's going to go over management structure and core maintenance. So with that, I think we will proceed and turn it over to Justine.
Thank you, Jeff, and thanks to everyone for joining us this morning. My presentation is going to build on what Jeff has introduced, just really looking at each piece of the puzzle as a crucial piece to setting up and maintaining a great core. I will be talking about the beginnings of these pieces, and my presentation is going to focus on three main segments. One is to really think through how these pieces come together in the first place, the process of forming these puzzles, to think about the broad concepts of what needs to be put in place before the core ever comes to life. And then gathering the pieces is to really start, once you have all the pieces formed, start setting up the core, and then the last segment and what will lay a foundation for subsequent segments in part one and part two is really fitting these pieces together, getting the core running, operational, doing great science, while at the same time being compliant and returning the most value to all the stakeholders that have a skin in the game. So, like I said, we'll start by looking at forming the pieces, looking at each piece and how the thought process before having each piece in place. And I will start by introducing three broad concepts and a framework. And I look at these as the three things that you can't ignore while thinking about starting a core. It's one of those three things. If you think about them carefully at the beginning, you have an opportunity to start a great core, and if you ignore them, you risk having a mediocre core. So mission alignment, you have to think about how that core aligns with the mission of your institution. It's really justifying why you're doing this. Think about target beneficiaries, who is going to benefit from this core. What are their demands, what's the usage, that's why you think about usage, projected usage, and we'll be talking about this in great detail. And then think about what you have to have together to get that core going. Lots of investment in all forms and shapes, and we'll look at that further down. Mission alignment, as I mentioned, you have to think about how your proposed core aligns in the broad mission and strategic priorities of your entity. It really goes back to justification, strategic justification of why the core is being put in place. For us at the Medical Center, we are thinking about research, we are thinking about training, as Dr. McLeod mentioned yesterday. Training cores should be the centers for training and innovation. We have to start thinking about our core facilities as achieving that. We have to leverage our core facilities to be the centers of innovation and training the next generation of scientists and scientific breakthroughs. We are a medical center, so we have clinical care as part of our mission, and so when we set up our cores, we are not only thinking about science, but how the science translates into the clinical operations. And it's really this sort of analogy from benchside to bedside, we have to have that in mind while we are thinking about the core facilities that we support. Rankings, most of us want our institutions to be the cutting edge of technology and research, so we think about rankings and how our core facilities, we can leverage them to give us that outcome. And you might also have all of you have different mission statements and different strategic plans, and so in thinking about core facilities, just make sure that all of that is represented as you think about setting up your cores. Target beneficiaries, you have to think about who the core is supposed to support or who is benefiting from this. Is it a defined group of users in a department, and that's a departmental core? Is it a shared resource in a program grant? Is it an institution-wide facility where it supports multiple users and in the institution and beyond? Do you have industry plans of partnering with industry, generate some program income? So all of that has to be to be thought through before you get your core going. Investments, you have to think about capital and operation, and Aaron will talk about a little bit about the capital and operational investments in terms of finances. Think about equipment, what type of equipment. Think about space and staffing considerations. Think about, for equipment, are you going to buy or lease? Is it going to complement existing services and technologies? Are they complementary? Can you leverage that, for example, in negotiating this with vendors? And siting. Our brain imaging center, as I mentioned, serves different purposes, clinical, research, and others. So in setting up our center about 15 years ago, we had to think about strategic siting for the center, whereby it was to support the clinical operation as well as the research mission of the institution. So that can really, thinking about that will be helpful in how you site this facility, and whether you want to build a new building or renovate existing space. We had to think about, some of you might have research triangles, some dedicated space for research, and whether this fits into that space or you need to create new space. So all sorts of considerations, special use permits, zoning considerations, city, and all of that. Again, talking about space, these are some of the things you have to think through in trying to figure out how to site your core facility. Core staffing is a huge investment. You have to make sure you have enough skills and expertise, and this, whether it's in-house, whether you have to go out and hire and recruit trained individuals to set up and run the core. Are you going to hire, or can some of these services be contracted outside? And so once you've put all of that package together, you have to start thinking about really how to finance it. How do you source the investments to start the core? And depending on what type of core it is, depending on who has skin in the game, these are some of the people that could be part of your stakeholder group in terms of sourcing investments. And this can be in form of dollars, equipment, space. Some people can contribute their effort and expertise. You have advisory boards who are your ambassadors in the community and beyond, reaching out to philanthropy for that type of support. And then think about resource commitments and duration, and that's going to inform really sustainability discussions, and we'll talk about that in further segments of this presentation. And this will also help you in thinking about the value you really articulate to your users. And then mission alignment, it's really this sort of aligned efforts. So once you have thought through all these high-level concepts and framework, then you start gathering the pieces ready to start your core. And it's at this time that you really start setting up the core and bringing it to life. And now we are ready to begin the actual work. We have the investments, we have the space, we have thought through the expertise and personnel and equipment and space, so we are sort of ready to start doing the actual work. But before we do that, we need to assess demand for services. And this is, and then establish business and operational models. assessing demand, and this will help you to gauge user interest in the new services. I see that as a go, no-go type of decision, and you could have done a lot of great work leading up to this, but if there's really no demand for your services and you don't project, good use of services and user interest and added value, then, you have to start thinking about these go, no-go decisions. And this would also be your chance to consider some partnerships. Some people might be able to pull together resources to make this core a go. And then I also put some examples of some of the tools you can use for assessing demand, some of the survey tools. Some of you might already be using some of these tools. And here I will give an actual example of what we have done. And I want to say that what I have mentioned leading up to this does not only apply to a new core, setting up a new core, but these concepts and this framework could also actually be applicable to when you're adding a new core service or a new capability of technology. And this is one example that I'll share with you of what we have done just recently at my center, Imaging Center. We have MRI, we have high-density EEG, we have MEGs, and so we were looking to acquire a high-density EEG system to complement our existing capabilities, and this would really bring more value to the research, will enhance the research, and would lessen some of the research time that our research participants have to spend, doing EEG and then doing MRIs, because we use multimodality imaging technologies for some of our studies. So this high-density EEG that's MRI compatible, you'd be able to run different imaging modalities in one. So instead of spending 3 hours with a participant doing different imaging modalities, you spend just 1 hour because you have compatible technologies and you're gathering data at the same time. So this is what we're proposing to get. This is an actual survey that we sent out. It's very small. You won't be able to read all the text, but what we did, some of the key pieces of information we were gathering from that survey was, we described what this service is and the rationale, what the unmet needs were. We highlighted how it complements our mission and then how it aligns with other existing services. And we were able to gauge user interest. We asked specific questions. Would you use this technology? How would it benefit your research? Would you be able to contribute to this instrumentation if we were to proceed with that? And then that was the survey. And then the next section, once you have all your pieces together, then you start thinking about establishing business and operational models. You've already acquired your instrumentation or about to acquire instrumentation. You think about service contracts and maintenance. You think about who you're serving. Is it and levels of interaction? Is it internal? Are you going to attract external users? Are you going to sell your services to industry? Program income considerations, and what does that look like in terms of program support and compliance? You think through management structures, and my colleague Sean will be covering that in depth. Oversight and advisory boards, Heather Richards will be covering that in her segment. And then think about listing of services, core access and access levels, operational models. Is this fee for service? Are you offering a hybrid type of model? In my center, we have both fee for service, where it's pure fee for service. Bring your research questions, we'll just run your data, put it on a flash drive or whatever, or put it through XNAT, DICOM, and then off you go. We also have a collaborative model whereby we partner with the investigators all the way from conceptualizing, designing the research study, applying for that next grant application. Once the grant is funded, we collaborate on running the studies, interpreting the results and manuscripts. So we call that a collaborative model, and we price that accordingly. And then there are also all types of forms that you could adopt, and some of you might already be using. So Think about short and long-term budgets. My colleague Aaron Rosen will be covering that again as well. Think about what goes into the rates and fee structures. That will be covered in another segment as well. And when all that is in place, now you start putting things together and you're about ready to start operating. Then you think about next steps to maintain and sustain the core, make it very efficient and operational while doing good science and supporting the business aspects, and then returning value to your stakeholders. These are some of the pieces of the puzzle that you saw in the first segment. Most of these will be covered in the next sections and Back to Basics Part 2. I am just going to go quickly over the long-term planning, because how you start, if you start very well, then you have a good chance of success with your core operations. And it's really how you start that really defines how you end and your desired outcomes. So I will talk about long-term planning, financial plans, operation and capital. Aaron will be talking about those again. Strategic plans, you want to think about the relevance of your services now and in the long term. You want to consider changes in technology, staff and training, keeping staff trained in the latest technologies and findings in the field. Succession plans, make sure that you have all of these in place for when core leaders and managers move on, and you want to keep that continuity. And then sustainability plans. We'll be talking about sustainability this afternoon. Be sure to join us for that. We'll explore in depth what it means to keep a core vibrant, do good science while sustaining the core operations. And again, long-term planning, those are some of the things you should think about when you're setting up your long-term plans to keep the core vibrant and sustainable. And the next sections will talk about, now that you have all the pieces together and you're ready to start your core, we need to make sure that these pieces actually keep together and you're doing a good program and sustaining it. So I will now invite my colleague Aaron Rosen to take us into the next segment of rate setting and financial operations. Thank you.
Good morning. My name is Aaron Rosen, and I'm the financial administrator for the Core Facilities Program at Northwestern University. And my job today is to summarize everything you need to know about core finance and administration in about 15 minutes. So I'm sure I'll get through all of that. So in a sense, there are two things you need to know about and two things you need to do on a regular basis when you're doing core finance. You need to know what's happened, and that's number one. And then number two, you need to know what you're going to do. If you got those two pieces in place, you're going to be okay. So what do I mean by that? What I mean by what happened is you have to understand the model and the metrics for your individual core or for your portfolio of core facilities and track those metrics over time. So you have to have a good multi-year model for core performance. You've got to identify and track those key metrics that drive your core's performance over time. And I think this is one piece where I'm going to talk about something that's not actually core finance, but it's something that I think Jeff really alluded to well in the beginning in the intro, is that, I'm a core finance administrator, and when I have these conversations, I have to recognize that, that's how they think that I see them, and they have to know that I see them as multidimensional and the finance is just one piece. And so recognizing that if you're a financial administrator, that's not all that they are is super important. I was at an ABRF conference a few years ago. I was out to dinner with somebody from another institution, and he said to me that I do not want some 30-year-old MBA type coming into my lab and telling me how to run things. And I took him at his word, because that's the truth. So understand that when you have these financial conversations, you have to recognize that it's a lot more than that, and you would do a disservice if you don't recognize that. Okay, that's part one. And part two is really you have to consider how you structure your services. Now, you do that on your cost study when you figure out what your services are, and I'll talk briefly about that. But I think that there's sort of a fundamental underlying thing that people miss often, and that's how you bucket your services. You have a lot of subtle decisions to make there, and I think that what you'll find is that if, depending on how you bucket your people and your instrumentation, different research groups are going to perceive things very, very differently. And I think it's important to understand and recognize that. So without further ado, I'll go on to part one. So this is real data. This is our financial one sheet. And I make this one of these for every single core facility that submits an annual report to our Office for Research. And it's a useful multi-year tracking system. And I want to talk about the things that we look at in this and what they all mean and why you should care and why you should track them. So this is an analysis of a recharge for a large and successful core facility at Northwestern. And here are the components that drive their performance. So the first thing you want to look at is the previous year carry forward. So previous year carry forward is how did the recharge do that previous year? Now, there's kind of two problems take on two forms. Problem number one is a deficit. That means that they, between all the various revenues that came in, there was less money than there were expenses, and that's an institutional problem, right? And the other kind of problem is you could have a surplus. In other words, you're charging too much. Now, what we say, our rule is that you can have up to 2 months working capital. So let's take all your expenses for that core for a given year, divide by 12, multiply by 2. That's 2 months working capital, and you can have up to that in the core recharge, and that's fine. But if you have more than that, then you are overcharging your customers, and you have to, do something. You either have to increase your cost basis by hiring someone, or reduce your rates, but you have to sort of not have a huge surplus. There's internal revenue. That's your bread. Internal revenue can come from all the charges that you're applying to all the grants that are using your core facility. Could be institutional startup funds. It could be any kind of internal funding. The butter is your external revenue. So external revenue is anything that's coming from outside of your institution. Now it falls into kind of two categories. It's either external academic or it's external commercial. The thing I will warn you about external revenue is there may be tax consequences. So I would invite you to have a conversation with your university tax officer. You might regret that, but you should do it. Because there's potentially unrelated business income tax depending on the nature of the work. So that's a whole conversation I could talk to you about, but I'm not going to because I don't have the time. But just have that conversation. Okay, so those are your revenue sources. Then on the expense side, in the vast majority of cores, the thing that drives your expenses is typically the salary and fringe of the staff in the core. The thing that I would recommend being wary of, especially with financial management, is that salary and fringe is often complicated by the fact that people are not 100% on a core. Oftentimes they'll have a percentage that's on the core, a percentage that's in a department because they might have a teaching role. It might have a little bit of a percent effort on an R01. And so you have to make sure that kind of three things match in three different systems. That, that the amount of effort on the cost study for your rates is consistent with the, how the payroll is set up for them in your HR system, and then that should also be consistent in some sense with your effort reporting system. So all three of those things should have some correlation with one another, and oftentimes those three things are managed by three completely separate groups and entities. So you have to figure out how to coordinate those things, and that's often fun. So be wary of that one. The next thing I'll talk about is equipment depreciation. Now, what I mean by that is really precise here. It's not equipment depreciation in the sense of like the way accountants often think of it, but it's the really precise way of putting this is cost transfers that are built into your rates that are based on a depreciation schedule. What I mean by that is, there's this depreciation, which is a very theoretical thing, but then you can do sort of cost transfers that are part of your rate structure that let you build up a kitty in a separate account to eventually replace capital equipment. Now, that's something that oftentimes people will avoid because they think that makes the rates too high, but it's something that you can do for equipment that was bought institutionally. So you can't do that with an S10, but you can do it with stuff that, or you can do it with a portion of the equipment purchase that the university paid for. Service contracts, those should be part of your rates, and in sort of instrument-heavy cores, that's often a pretty big driver of expense. And then supplies and services. So the thing I'll say about supplies and services is that this should be all the supplies and services that hit your recharge. But oftentimes there are supplies and services that fall into what's called a pass-through category. What that means is that you're going and you're buying this stuff and you're selling it at cost. Those should be reflected in your costs, but they shouldn't be reflected in the rates because that would be a subtle way of double charging. So. And then the next, those are the things that sort of make up your expenses, right? Those are your big categories of expense. The next category is on its own, and I'll leave it, and it's sort of a form of revenue, but it's also should be treated separately, and that's the subsidy transfer that's going into the core. Now, the way this works for us is that we're interested in tracking dollars that are literally put into the recharge. And that can come from all kinds of different sources. That can come from a dean's office, that can come from a department, that could come from the provost, it could come from any group that wants to provide money to a core. What I want to distinguish there is that those are dollars that are transferred in. There's another subtle way of providing a subsidy. So anyone who has a CCSG or a MERSEC or any of those other kind of grants that directly support cores, that works indirectly. That works by taking salary and fringe off of the expenses, which means your cost basis is less. It's not dollars transferred in, it's dollars rerouted elsewhere. So it looks differently. And what we've found actually is that tracking those dollars tends to be the most difficult because you have to understand the structure of that grant and how it's supporting the core, and that's often outside of the context of the core, but it's important to understand how that works. And then so what you do is you calculate your percentage recovered. So your percentage recovered is a good thing to track over time. It's basically, for us, it's internal revenue plus external revenue, and then divide that by your total cost basis in the core to get a percent recovered. And you can see, it varies for this particular core. Their fiscal year 16 result is pretty in line with Northwestern's overall recovery rate. Across our entire portfolio, we're at about 80% recovery, which we think is pretty darn good. We're actually fairly pleased with that. And the other piece is made up of subsidies from all these different sources to bring it to zero, more or less. Sorry. The next box is institutional investment. So institutional investment may or may not actually go through the core. In fact, some of it may go through the recharge. You don't want to have certain kinds of financial activity happening in your main recharge account. So equipment funding, for example, we in the Office of Research have an equipment funding program. We do 2 rounds of competitive equipment funding, and that goes through a separate account. It helps the core, but it's important to keep it separate from the recharge element. We also provide operating support to our cores, and that is often to do things that, again, shouldn't go through the recharge. Like, for example, grant writing is activity that is important, but our interpretation of OMB circular is that you shouldn't have the effort associated with grant writing on the recharge. And so if you can reroute that salary effort to a different account, and then we'll fund that because we want you to write grants, right? And so then we're sort of tracking this sort of overall total support that may or may not go through the core. And then the final bottom section is just our sort of relative understanding of the impact of this core on the university, and in other words, who is it serving? How many different departments is it serving, and how many different PIs is it serving? It's not to say that cores that only serve a very small number of PIs and departments aren't important. It's just that this is one that clearly impacts a lot of departments and a lot of PIs, and so it's clearly pretty important. So those are some of the things you want to track and understand. Now, that's how you look back. Looking forward actually is pretty much you're looking at the exact same things, but you're doing the exact opposite. You're taking those categories of expense that I just talked about, and you're applying them to services. Am I okay for time? Oh, okay. This is theoretical. This is imagine a core that has two pieces of instrumentation. One's an old piece of instrumentation, one's a new piece of instrumentation, and they have tech time that they offer. So you've got a people and you've got some stuff. And the thing that you have to understand is that you have a lot of freedom to bucket that stuff in very different ways, and different people are going to perceive things depending on how you bucket it. So in a sense, when you do a cost study, you take all those expenses that I talked about in part one, you divide them across your service line, and then you take each of the expenses for each service, divide the expenses by the utilization, and you get a rate. And then that's the rate, that's the max rate that you can charge for those services. But think about how you can divide that up. So one way to do it is that everything's a la carte. You have the old instrument, you have the new instrument, and you have tech time. And if somebody wants to buy any one of those three things, they can buy any one of those three things. So, significantly, if you're buying you're buying instrument time in the old instrument, you're paying $35 an hour. If you're buying sort of assisted tech time on the new instrument, you're paying $115 an hour. The second model that I've got up here is, let's just say that, I'm not going to make a distinction between the instruments, but I'm going to make a distinction between tech assist versus non-tech assist. So you've got a different rate depending on whether or not you're having somebody help you. So it's $95 to have somebody help you, and $55 if you want to use it on your own. And then Model 3 I'm jokingly call Apple Computer, where I don't give you an option, I just say there's one option. And the question that says that the rate is $75. It doesn't matter if you use the new instrument or the old instrument, and it doesn't matter if you get help or don't get help. It's all one rate. And you got to think about these things in terms of who's going to want that and who's going to like that and who's not going to like that. So I'm just going to talk about the bottom two things, the preferred by and disliked by. So the first model, where it's everything's a la carte, who's that going to be preferred by? Well, it's going to be preferred by the cost-conscious users that are fine with using the old equipment themselves, because they get the best rate. They can come in and they can use the thing for $35 an hour, and it's cheap and easy, right? But who's it not liked by? Well, it's users who think that there is a major functional difference between the new version of that MRI and the old version, or the flow cytometer, or the electron microscope, or whatever it is. They think that the new one is absolutely much, much better. And maybe they want help too. I mean, maybe they've got a younger group of grad students that need help all the time, and so they're paying 3 times the rate. For the for the middle option, right? It's preferred by users who care about selecting between self-service and full service, but they're not as much concerned with which version of the instrumentation they're using, and it's disliked by, again, people that see a big difference between the new and the old. And then the Apple Computer model is, it's liked by people who want a simplified model. They don't want to think about it too much. They just want to be able to ask the tech for help when they need the help. They want to do their own thing when they want to do their own thing, and they just want to say, okay, this is the rate for coming to this core and doing stuff here. Now, you can see that, like, I want to show you, the idea here is that you've got a cost basis of $300,000 before subsidy, $150,000 subsidy, and it's the same financial model in all three cases, but the rates that people pay in each of these three situations is very, very different. And people are going to, these different researchers are going to have a very different perception of your core depending on which model you pick and how you set this up. And so you're going to ask me, which is the best? And I say, well, it depends, because it depends on your set of researchers and what's going to work for them. And so there is no answer. The answer is you have to figure out with your researchers which model is best. There's another subtle thing about sort of that's different from the bucketing. It also has to, but it's related, and that's the unit of measure for your services, right? So you could imagine selling things as an hourly rate for your labor. You can imagine on a per experiment basis. There's all kinds of different ways to unitize the services as well, which is a separate sort of question you can ask about how do you organize these things and how people perceive them. And you have a lot of options there too, as you well know. So that's what I have got to say. Is that again my statement is, know what you've done and know what you plan on doing, and I think you'll be in a much better position financially if you come up with a model to do that. All right, that's what I've got. Thanks.
Thanks. Good morning. Thank you, Justine and Aaron, for setting the stage and working up to the presentation that I'm going to present on management structure and core maintenance. It complements those topics. I just want to reinforce one of the things that Justine mentioned is long-term planning, and Aaron mentioned about looking forward and understanding what you need to do. Those are two themes that will really even work into my presentation when we talk about core structure. They are important aspects of planning to make sure that you're effectively running a research core and that you don't get yourself into trouble financially or even from a compliance standpoint as well. Before I start, I wanted to first set the stage and present some background on why I'm even talking about management structure and what I do at Johns Hopkins. I work out of the Vice Dean's office, so I'm not integrated into a specific core and work at the local hands-on level. What we have as an office, I work with Jeff Smith and another colleague, Barb Daly, there, where we actually help with the core management system. And a new twist to what we do over the last 5 years is any departments that want to start a core actually have to submit a business plan and a proposal where we review to see what their structure is like, how are they going to operationalize a core, what does their 5-year business plan look like, so that we are smart about understanding, is this core viable, is there a need for those services, and then also I provide some consultation and guidance on what is the best structure, and if there's a structure that doesn't fit with what they're trying to do, I provide guidance that way as well. So just looking at the outline of what I hope to present to you today is the first aspect is going to be the management structure. And the areas and topics are the important questions to ask about management structure. I'll give you some example scenarios of the different structures that I see. It's not all inclusive. Some of the structural considerations of a core when you are setting it up. And then something that doesn't get talked about too much, but we see it every day, is what is the departmental support for the cores. At Johns Hopkins, our cores reside in the department, and the finances of the cores also reside there. But a lot of times what is not talked about is how does the department support a core if they do see it failing or struggling a little bit, and as far as providing resources. And then the second part and the second half of the presentation will be on core maintenance, which will cover topics on the key items for core maintenance, operational and workflow considerations, ongoing evaluation, and then instrumentation. Instruments seem to come up with every talk that we give here today, so it almost deserves its own little topic inside management structure or core structure. So in starting off, the first question when you're talking about trying to map out the effective core structure is, what type of core facility is it? And this is a very broad question that requires you going in and digging in at a very local level and understanding. So part of my title is faculty resources. I actually will go in and a lot of times ask, why is this service needed? Who is going to perform the service? Who are going to be the key members doing this in that core? And I think it's important to understand structure, and the best structure is to understand those questions at a very detailed level and do a deep dive. Secondly, you want to consider, if you're looking at core structure, I sometimes group these cores into two different areas. One is, are they equipment intensive or are they personnel intensive? So if you think about it and you really dig in, we sometimes are naive and don't think about it that way, but I look at our biostatistical cores or the cores that supply personnel assistance differently, because they might require 6 computers and a people sitting in a lab versus the equipment-intensive cores that require lots of capital to start up and maybe just one technician to run the samples on that particular instrument as well. The next question is, what are the roles of the core staff? As far as long-term planning and complementing what Justine said, it's important to evaluate and consider those things before you start up a core. You don't want to start up a core and then say, okay, well, who's going to do the billing? And who's going to keep the calendar? And who's going to reserve the question? Who's going to assign the work? Those things should be basically talked about and identified early. Also talking about the time commitment of the director and staff. We at Hopkins, it's tough to get a grasp on how many cores you have sometimes at a school and a university, but we do have over 100. And sometimes it's difficult to identify what is the director doing in each of those cores, and is that director a PI and a faculty member, and is he or she actually doing something that's hands-on in that core, or are they more just a figurehead that actually helps with the staff and the running and basically serves an important role of it. Also, identifying the staff knowledge of the Service Center on policies and guidelines. I think that is also a theme that comes up a lot with these talks on administration. How knowledgeable are the staff, and do they need some training? Do they need some reinforcement of training? And those are some of the key things to consider. And then the level of support from department administration and finance. If I look back to Johns Hopkins and the School of Medicine 15 years ago, we had a lot of mom and pop cores that started up that basically had a need. They developed as a 2 or 3 person show, and then the department just sat out to the exterior and said, okay, well, they wrap up into our finances and our all funds budget, and we understand that. But now what we're trying to do is to go to the departments as these cores are starting and to say, if this core needs help with billing, if this core needs help with hiring, are you going to be able to support this core and the structure of it so that it's complementary instead of basically working in isolation as well? So the questions are out there. You just need to ask the right questions. So this is, again, a couple example scenarios of structure. This is not an all-inclusive list. What I've tried to do is sort of grasp, if I had to use examples of a 3-person core and what I see in our institution, what are some of those? And what are some of the advantages and disadvantages to each? So there's 4 different scenarios, and there's a lot of circles on here, I know. But the first scenario here, where you have the scientist, you have the administrator, and the coordinator, what happens here is this is actually probably a core that's supported quite well from the department. That administrator might be embedded in the department and helps when he or she sees that the billing isn't being done, or helps when there's a hiring that needs to be done, et cetera. When you have a scientist, sometimes at the helm that is running this, they are a subject matter expert. A lot of times they're also invested. So this is not a particular faculty person, but their full-time job is actually to help run and manage the core. And then what happens is the coordinator is actually retrieving some of the requests, helping with scheduling, keeping the calendar, et cetera. So it is a strong system for billing and actually for leadership, because that scientist is fully engaged in the process. Another example that we see is a faculty director, a technician, and a manager. In this case, since it is a faculty member, a lot of times he or she have their own research portfolios that they're doing. So sometimes being the core director is not their full-time job, and a lot of times what they do is they leave it to this individual here. Again, this is a strong management type of structure, especially technical-wise, because you have a technician that a lot of times is complementing that manager as well. If you move on to the third scenario, where we have a scientist, a technician, and a manager, this is actually a very strong science background. What sometimes we see with this particular scenario is, who's going to do the billing? Who's going to do the administration? Everybody wants to do the science, but it's difficult to have somebody step up and say, I'll learn the core management system, I'll do the billing each month, and it's on me. That's a challenge there. And then finally, I think one of the most interesting scenarios of structure is the faculty silent partner, the analyst and the tech. So this is a situation where you have a figurehead faculty member who is an expert at this particular scientific area. You have an analyst that hops in potentially and knows the finances real well, and a technician. But what happens is there may not be a strong presence as far as scientific management like you see in some of the other structures where you have a manager who's a specialist that can help guide the operations. Interestingly enough, sometimes when we are emailing with our mass core lists updates, I will have the silent partner faculty come back and say, stop clogging my email. My inbox is getting clogged with all your compliance-related questions. I don't want to receive these. So it can be a challenge when you look at that type of structure as well. So, and when considering these structures, it's not a one-size-fits-all, but you should think about things such as billing, scheduling, and admin resources. So here's just some of the checklist items of considerations, and it might seem like they're repetitive, but when a core starts up or when you're trying to devise a particular strategy of the structure of a core, you want to look at the knowledge of core guidelines. We've learned our lesson the hard way that mom and pop shops, without considering training and education of those things, a lot of times are setting themselves up for failure. You want to identify the role and function of each person. You want to understand that the training of the staff for new cores is important, but also Jeff, I know, talked about this earlier when he set the stage for this particular symposium, that sometimes the older cores, you need to go back in there and actually do some retraining as well, because they've had staff turnover or individuals forget, and they focus on science versus some of the admin pieces that you need to focus on. You need to partner with the department. Some cases, if you're looking at the core structure, we have identified that they might need an extra FTE to be successful and do some of the functions of that core. When we look at the 5-year business plan or the rate schedule that's put together, it may not be sufficient to support that extra FTE. So in those cases, sometimes we have to go to the institution and the dean's office and say, this core is lacking by about $75,000. Are you willing to subsidize them to have this extra person come in and do that role? And then finally, identification of the individual for billing. That keeps coming up because at Johns Hopkins, we keep seeing that scientifically there's a lot of solid work being done at the core levels, but sometimes it's that afterthought. So here are some of the important things that a department can supply as far as support when it comes to structure. From an administrative standpoint, they can help with resource allocation, and they also are your advocate. If you can set the stage the right way and present it the right way, they can be your advocates to go if you need institutional support or support for extra FTEs to help out with that scenario. Additionally, financial-wise, this is actually probably financial administrative, but they can help with billing and auditing. There are instances where we see that a core has not billed on a regular intervals, and we will go to the department administrator and say, listen, we need some engagement here to jumpstart this core. They need an analyst to hop in to help catch them up because we are seeing them fall behind, and I think it's important there. Auditing is very important. It's a hot topic in our institution because we are always doing internal auditing and looking at how we can improve ourselves. So our CFO comes to me and always says, are you training? Are you keeping up with this? What type of system is helping with our auditing process and for us to be compliant? From a compliance standpoint, we do have, it's important that the department helps with supplying oversight of the uniform guidelines. Later on in the sessions, I think Heather is going to talk a little bit about that in our part 2. And then there's unique issues. I'm not sure how many in this room have this, but we get some unique scenarios all the time that fall outside the normal realm of rate setting and just a standard core. And for those, a lot of times we have to bring in our financial research compliance person and partner with him to say, listen, this core wants to do this with this piece of instrumentation and share between these people, and this person's purchasing it, this person's doing this other part of it. What is your thoughts? And this is where the compliance group can help with it. And then finally, HR. When it comes to hiring your FTEs to support a core and the structure, once you establish that, they help there. And then also the review of staff roles. One of the things that we are always doing is trying to look at how can we promote our staff, especially the good ones that are within the cores, and HR can help with that to document and actually move that forward. So some of the key maintenance items. This is a repetitive theme, but one of the things that cores, I think, when it comes to maintaining for the long-term need to do is to try to look at the finances and at least be aware of those and partner with a department if they are not. We have seen that in our particular institution, we use an SAP accounting system. If I went to the faculty directors and said, are you aware of what these reports look like and how to read them? They would say, no, and I don't want to know how to read them. So it is important that you actually, in some way, have somebody to interface with those cores or also teach them what do the finances look like, what's an easy report for us to show you so that we can actually maintain the finances for the long term. It's important to also look at your service delivery and how requests are coming in, how calendars are being reserved for your equipment instrumentation, because sometimes there's better ways to do that for the long term. Technology and instrument obsolescence is important as well. We realize that scientifically some of these cores are very fast-paced. As soon as you purchase the equipment or lease it for 5 years, something new and interesting is coming out and the vendor wants you to purchase that. So it's important to sort of maintain where you stand with your instrumentation. Software upgrades should be done regularly if possible. Data security and backup, you can see on the right-hand side. I have a story that just came across my desk. It was 2 weeks ago, and luckily it was a positive ending. But one of the cores that actually had their process in place, it was actually a core that would recruit and do assessments on clinical research trials. And participants would come in, they would do a particular test, and the core would actually hand a paper copy report to the research coordinator. 2 years ago, the study ended, but the PI needed to report on the findings of that particular test. They could not find the paper copy reports. When they went to the core, what had happened is the core had upgraded their software on that particular instrument, so they could not interface and even pull those out of all their queue where they had them stored. So they were not keeping up with the maintenance part of, we need to talk with the manufacturer to say if we upgraded our particular software, whether we can pull and archive from our old reports as well. So it was a happy ending because the manufacturer was very happy to hop in and actually provide them with software to pull that information out. Also, staffing and resources based on service volume. So looking at your volumes long-term, I know Aaron put up there the 5-year plan. As your volumes change, so might be your revenues, so might your staffing needs as well as far as your maintenance. Website's an important one too. As an example, there was a core that just recently purchased a new microscope. They now have had that microscope for about 3 months. When I went into their website to look at what's the availability of their instrumentation, it's still not listed there. It's their Cadillac version of microscopes, so it's important to keep that up to date because researchers might want to come in and actually use that as well. Staff training is important to keep a hold of as far as the maintenance. Staff evaluation and retention, so not ignoring the need for that. And then finally, looking at your core rates versus market rates. Sometimes people just look at internally what's our rates. Some of our most astute directors go out and will say, well, what's the outside market charging for these, and are we competitive, or do we have to reevaluate those for the long term? On the right-hand side is a neat quote. I think that kind of summarizes quality real nice. Quality means doing it right when no one is looking. And a lot of times, maintenance and quality assurance is done when no one's coming to your cores and making requests. And it's that important part of the time that helps for the long term as far as making a successful core. So some of the things to consider, standard operating procedures and making sure that they're up to date and relevant. Tracking of documentation, so some of the cores have to keep the IRB protocol applications on file and specimen storage tracking. Standardizing forms. Sometimes you have a variety of forms. If you're in the maintenance phase, it might be good to reevaluate that and standardize. Quality assurance and testing for the long term. Is an old piece of equipment doing what it should? Is it accurate? A lot of times we actually do not put that on, it's not on the top of our minds when it comes to running a core. And then also a defined maintenance schedule to make sure that our instrumentation and equipment are running effectively as well. And then finally, with the core maintenance, as far as the evaluation of it, continuing to do staff training if there's turnover. We realize that I put on the structure there and the examples, there's a few technicians. Technicians don't stay in labs a lot of times for 20 years. They sometimes even jump around. So if you have a new technician coming in and filling a spot, understanding that we need to evaluate whether he or she has proper training as well. Budgeting, making sure that we're doing long-term budgeting and our yearly budgeting to ensure compliance. Periodic rate review and publishing of those. If you put those on the website, make sure that they are relevant and up to date. Reviewing of maintenance contracts. That is something I'm sure everybody who has instrumentation probably does, maybe not formally because it's such an expensive piece of your ongoing, probably expense base of cores as well. And then reviewing of current instrumentation versus customer needs. So this is a bit of a balance, but for the long term, a lot of times what happens is probably if you are in an instrumentation core, you have faculty coming up and saying, when are you going to get this? I have seen this new fancy item. So I think a lot of times some of the most successful cores when it comes to maintaining are weighing the options of what do I currently have and offer and how does that financially fit into our portfolio versus what can I potentially afford or when can I afford to purchase that newer piece of instrumentation to meet faculty needs of your institution. And then this is one bullet point, but probably can be a huge amount of 30 bullet points altogether, but evaluating your space needs. And not only expansion needs, because a lot of times if you're in an institution, I handle space for Johns Hopkins as well with one of our vice deans, but a lot of times everybody comes to you for expansion needs. We need more space in our lab because we're getting more instruments, or we have more FTEs and bodies in there. But if your core has a down period, it might be advantageous to identify if you can actually contract. You know, if you are seeing less volumes, it might be that one particular core should contract, whereas another core that's seeing higher volumes might be able to take and share that space as well. So it's an important thing to consider in the maintenance phase of cores. This is my loan slide for the instrumentation. Although loan and also having just a small amount of bullet points, I think it's a very important piece. Once again, I think what is important to evaluate when it comes to the maintenance period is when in instrumentation is this piece of equipment relevant? Is it suiting the needs of our faculty or the users of that core? Or is there a concern with obsolescence as well? So I think maintaining that perspective is important. Tracking of equipment and the maintenance schedule and how old it is and how many pieces of equipment you have is important. Many of you probably are already doing this, but it is important to emphasize. And budgeting for new pieces of equipment. So I talked about how the department, at least in our institution, is important because there's a relationship that needs to be had with the department and the cores. One of the things that you probably realize is if you want to buy a piece of instrumentation that's not grant funded in some way, you need to budget as capital or consider leasing it for the long term. In our institution, what has to happen is right around January of a particular year, you need to start putting in your budget for July in the next fiscal year, your capital budget to purchase or do a lease for that new instrumentation. That's an important timeline for you having discussions with the people who will approve that so that you can actually have it in place in the next fiscal year as well. And then also looking at the adequacy of service and maintenance agreements. There are some occasions where our directors will have direct conversations with instrument companies and actually check to see if they can revise these particular agreements or to look during the next phases of them if something can be done differently to satisfy the needs of the equipment maintenance. So in conclusion, here are a few just summary points. The ideal management structure for cores is not a one-size-fits-all. So I put up a couple scenarios there, but it really is based on a case-by-case basis and what is happening within that core, and it's important to ask the important questions. Special consideration should be given to core staffing, resources, and staff education when establishing that management structure. Core maintenance is an ongoing process that involves continuous evaluation of service delivery, procedures, workflow, and equipment. Ongoing assessment of customer needs, equipment obsolescence, and staff training are important for core maintenance. And cores should establish formal roles and core structure prior to a new core to ensure efficiency. And again, to just reinforce what Justine said, for the long-term planning purposes, not just in the next year, but what is going to happen 2 to 5 years out as well. And then department leadership should be contacted if support is needed in the areas of finance, administration, and training. Okay, with that, I'm going to turn it back over to Jeff.
Okay, I think at this point, we can open up the floor for any questions that you may have. Please step up to the microphones, because we are recording this session, and if you're not using a microphone, your question will not be recorded. So please.
Okay, is it on? All right, my question actually came up while I was during Aaron's part of the discussion, but I think any one of you could answer this. Is when you're looking at the salary fringe and the matrix of funding for the core personnel, what are you doing about anyone who might have support on a grant mechanism such as an R01 or a P01, an individual investigator research program grant? And how are you accounting for that, or are you allowing for that?
I guess I'll start. So if it's an R01 that has very particular research aims that are not, it's not a general core support grant like the CCSG or the MERSEC, we generally request that they exclude that from the rates. So in other words, if it's individualized research, it's not providing fee for service, and therefore it should be excluded. That's how we generally approach that.
And for us, it's sort of that collaborative model that I talked about, where we actually have core personnel that are integral to the design and performance of that study. So that's another model that we have separate from the fee-for-service model. And the reason we have that model, again, is going back to the keynote address that, from last night, is these core personnel have the expertise and they can perform these studies more efficiently than, for example, the PI going out on a limb, hiring a brand new person to be in their lab to perform these, in our case, imaging procedures, such as acquisition and data analysis. So we have core personnel, dedicated core personnel that have the expertise in imaging, and we assign a portion of their FTE to that project, and it's part of our collaborative model. I don't know if that answers the question.
Soma from Florida State. It's a general question we all touched upon. One is buying the equipment and service contracts. As Aaron pointed out, it's about 15% of the budget is for service contract. What in Florida State they are doing is, as a scientist, we are not very good in negotiating prices, not negotiating service contracts. Therefore, basically they're saying that to the scientists, core facility managers, you tell what kind of a Toyota you want to buy. We'll tell you whether it's a Camry or a Avalon. Is that being done in other universities? We find this a little bit easy for us because we have a good relationship with the companies, but they negotiate the price and service contracts, maybe 1 or 2 years. Is it being done other places? I just take the comment. Thank you.
So for us, the PIs, the directors of core labs, basically are on the front lines of talking with the manufacturers. Often we see a variety of responses. Sometimes because of that relationship, they get a pretty good price as far as the service contracts. They are the starting point there. However, what we have is it complements then where it would go to the department, and they would take that service agreement to our purchasing department, who would actually read the finer details and also potentially weigh in to see if it is an effective or competitive price as well. They also will make sure that what is in that agreement and the language is something that's going to benefit the purchase of, since you've invested so much in that instrumentation, it's going to be effective in actually complementing that machinery for the long term as well. So it's a partnership. I will say that what we have seen is and it's a work in progress. Our Vice Dean for Research has said there should be a better way of doing this. There should be, if there is vendors that have, where we have a lot of instrumentation in the university, can we leverage better service contracts? Again, we're not there yet. Our procurement department they understand that that's an initiative we're going to try to move forward on, but it is a work in progress.
So I'll make 2 points. One, Northwestern is a fairly decentralized model, so different cores and different schools and different areas will all handle this very differently. But we have one electron microscopy core on the Evanston campus where the PI director of the core is the most masterful wheeler and dealer you've ever seen, who goes over Japan and has Hitachi and JUL duking it out over the microscope he's going to buy, and as part of that he'll say, well, I want 5 years of service with this purchase. So and he's very good at that, but that oftentimes that's not done on a university-wide basis, which brings me to a second point where our general counsel's office is working really hard to try to come up and work with procurement to say, well, here are some big vendors that we buy a lot of stuff from. Can we have master terms and conditions in place that don't necessarily guarantee a price, but at least guarantee that there's a standardized agreement that we don't have to work through those terms and conditions clause anymore, and it becomes like the basis for a master service agreement, which is something we'd like to work towards in some cases, but being decentralized, that's really hard.
Just to add to what Sean had said, actually a few years ago, Johns Hopkins Procurement Services took upon an initiative to identify certain equipment manufacturers that were spread out throughout the university, and they found that service agreements for the same piece of equipment varied. So there was such a vast difference because you had, buddy over here with the service people, and then you had somebody else over here that didn't have that relationship. So there were always these sort of very disparate sort of, service agreements for the exact same service. And what they tried to do in identifying these specific manufacturers was to create a situation where everybody was treated the same, across the board, and the agreements. And what came out of that was actually, in part, a system where they offered a third party would come in and offer pricing. They'd still work through the original manufacturer for the service, but we found that a lot of times, when you order a service agreement or you have one, put one in place, there's a certain expectations. What's the response time? What's the level of service? What are all this sort of in the fine print? Well, come to find out with the third party, a lot of that stuff was like, pshoom, gone, and people would be waiting, 4 or 5 days for service, and to them that's not acceptable because that affects their revenue stream, and they can't do that. So we've kind of gravitated back toward dealing directly with the manufacturers because, that response time and all of those other sort of little go-withs with the direct dealing with the manufacturer, that's what they need. And dealing with the third party just wasn't the best scenario, so.
So Anthony, I had a couple of questions on your presentation. So just for clarification, when you had your financial report slide up and you were kind of breaking down the various components of how you look at it, you had subsidy as a line item, which was like for you guys generally the 20%, and then you had support from department or dean. And how are you separating that? Is subsidy, do you define that as something that happens after the fact as needed, or is it because I've tried to change the language a little bit of our institution, is subsidy not being a 4-letter word, and kind of I'm trying to replace it with planned institutional support. I mean, why were you separating those two?
All right, so I'll answer that. The word that people like a lot of times, and it gets around a lot of this, use the word investment. They love that. In general, that tends to smooth things out a little bit. So the thing in the top was, specific dollars transferred to the recharge, right? So there's this one particular account that represents.
When was it transferred?
So it could happen at one of two places, right? So sometimes it happens at the beginning of the fiscal year. If there's a known planned dollars put in to specifically keep the rates low and they applied for it last
Yeah.
year. So, but not necessarily, right? Because there are times when it's transferred at the end of the year too. So it doesn't matter, as long as it happens sometime during that fiscal year and it went to the recharge, I'm interested in that dollar transfer. So it could happen at one of two times, beginning of the year or the end of the year, depending on who's doing it and why they're doing it. So
So how is that different than the institutional support you had there? Because aren't those transfers as well?
So the reason that the institutional support box is important is that it captures a lot of investment that might not go through the recharge. Because, like, for example, institutional support to buy a piece of equipment needs to happen in a separate accounting bucket, because you can't buy the equipment in the recharge. You have to buy that in a separate bucket. Or the support to, for example, write a grant. Also, you want to keep that out of the recharge accounting bucket and have it take place elsewhere. So that box is, the idea there is to capture the whole entirety of all the stakeholders that are interested in supporting the core, but not necessarily that activity that passes through the core. It's also, the idea there is also you want to capture, like, if the CCSG or the MRSEC or another P30 is providing core support where the salary is being rerouted, that's core support, but it's also not in the recharge. So you want to capture that data because they're stakeholders too, but it's not taking place in the recharge. So it's to get that full picture business that goes beyond the recharge, because the recharge is important, but it's not all that there is.
Yeah.
Is that?
No, that's great.
Yeah.
So you did a great job highlighting three, really breaking it down to three models of costing your charges. I was curious, between you and your colleagues, have you found over time that you try to steer cores towards a specific one of those three models? Do you find one to be more successful over time, or do you kind of just say, here's your three options, what would you like to order off the menu here?
I mean, to be honest, the only one that I don't see that often was like the Apple computer one, like the one option. Not too many people go down that route, and the answer is between like other types of models, and those are not like, that's not all that there is, right? There's all kinds of ways. You've got stuff and you got people, and you can organize it all kinds of ways. Those are just three different ideas, and there's a variety, right? Some people like the idea of having, the new instrument and the old instrument at the same rate, and because they want to encourage people to use the old instrument. But some people say, well, I really do want to charge people a premium for the latest and greatest, and this older one, there's no service contract anymore. It's not very expensive for us to maintain, and so it can be super cheap, and that works for us. And so the answer is, I think actually, you mentioned that one size does not fit all. That's the answer, right? There is no one answer. It depends on what works for that core. Is that?
Yeah. Last one. So you guys noted that cores are more than just their financial statement. And how do you guys, as a group, because I think we're all always struggling with this, how do you communicate that? How do you kind of get ink to paper on that for your leadership to qualify the value?
Yeah, so Phil Hochberger, who I think most people around here know him in one form or another, really has been a leader in terms of doing a holistic ideas of core management. And so that financial one sheet, there's like this booklet that ends up getting produced every year, and that booklet there's 2 pages, and one page is that financial one sheet, and the other is the qualitative assessment of all aspects of the annual report, which has like eight different dimensions. There's a spider diagram. Andy Ott, who I see standing right there, is the director of core facilities for Northwestern. His job is to look at all those and write up those wonderful summaries. And so the idea is, we're interested in your publications. We're interested in everything that you're doing, and finance is just one dimension of that spider diagram. So it gives them the sense that it's way more than just the numbers.
Yeah, I want I want to very quickly speak to the previous question, very quickly, in terms of different models, financial models for core support. At my institution, in my center, we are looking at, this is still experimental, we are looking at partnering with the institution to recognize that some of the support we get, part of it is an institutional investment, and part of it is a subsidy, whereby investments are already contemplated and agreed upon and committed within the year, regardless of when they actually come transfer to the core. And then subsidies, we are making a case that these are operating deficits. And those can occur usually at the end of the year or any other time as agreed upon between the core and whoever is sourcing those subsidies.
So just to comment on the very last question that was asked, what we do at Johns Hopkins. So our Vice Dean of Research, who I work closely with, has started an office. The name of our office is the Office for Faculty Research Resources. It's not research administration. It's not financial administration of cores. So the focus really from the top down had started with understanding the needs of faculty and the science and making sure that we actually have an emphasis on that. Secondary to that, what we do in the cases where we're trying to balance the finances and really the scientific need of cores, our Vice Dean has created a committee of about 8 to 10 vice chairs of research from various departments. When we have a new core that is coming, and I'm evaluating the 5-year business plan and the structure, and basically whether this core should start up, it actually goes in front of that committee. And those individuals will actually have a say in, is this science important? Do we need this service? Is it cannibalizing existing services? If we have instrumentation, is it duplicating an existing piece of instrumentation? And we sometimes have instances where one of those committee's members says, you know what, I see this as losing money, but it's an important thing for Johns Hopkins faculty. I think it should exist. And sometimes even we have discussions about subsidy, that science is so important that the Vice Dean says, okay, I'm willing to put money towards it. So it's a thoughtful way to actually go in and look at the science instead of just always looking at this as a pure business standpoint. So.
Hello, Matt DeVries, Case Western Reserve University, Cleveland, Ohio. So we'll have on paper or in ERA Commons a Cancer Center Genomics Core, a CTSC Genomics Core, a Brain Health Genomics Core. It's really just one room with 4 signs on the door. But each of those grants we owe program income reports to. How are you calculating at the transaction level what fraction of each transaction belongs to which program income, and that it's getting siphoned off to the right bucket at the right time?
Okay. Program income. Okay. So we basically qualify almost nothing as program income. I'll give you one example of something where we do have program income, and it's there's a dictyostelium center that sells that provides dictyostelium. They provided it for shipping charges basically for many years, but on their most recent renewal, the NIH said you have to start charging for this, and they said okay, fine. They did, and we do now. There's some nominal charges that were written into the grant renewal for how much they sell a particular set of strains of dictyostelium, and then that gets added back to the grant. Now, that's really the only example of program income that I've ever been involved with, because we actually had an in-depth conversation with some other sort of grants that were supporting some cores, and in every single case, we basically said, the external revenue is balancing the recharge. It is not program income to the grant. So we sort of, as long as the core is breaking even, it's not program income. That was our assessment from our compliance office. And so I would question whether or not what you're looking at is true program income, or if they're making you go through a hoop that might be avoided. Program income is super complex, and we try to avoid it at all costs.
one of the things that, that we've done is, in order to recognize maybe different entities within an entity, we have we use a core management program that provides a mechanism to set up different modules, different subsidy modules, wherein you would recognize different investigators as belonging to a particular group, and that particular group gets a certain subsidy. So we can go in and we can set up these different, internal entities within this program, and then, identify those investigators so they could be, diverted to or charged whatever the appropriate cost is, and tracking that information separately. So it's just another way of just making, distinguishing between the different groups without violating, the compliance issues. So.
Catherine Hale, MD Anderson Cancer Center. One of the most important aspects of a core is having an exceptional, engaged core director or faculty champion. My question to you is, what happens if you have a planned or unplanned change of that particular champion? Have any of you been able to successfully negotiate maybe funds to have an associate director that is in training? And if so, funds for how long? 6 months, a year? That's my question.
I'll answer part 2 of that question. I haven't seen an associate director or a succession plan. I think it's largely due to the fact that funds are tight, and it is something that gets put lower on the priority list than other things. I have seen changeover in directorships of cores in my years. I think the key thing is, I mentioned, it's brought up again, one size does not fit all. It depends on the content of that particular core, and also the department where it resides and the support for that particular core. If it is a core that's essential and judged so by the institution, a lot of times we will have support from our vice dean, even to the department level, where we will realize that there needs to be a replacement director that is essential, rather than actually letting that be a void where the core would fail. We don't see it very often, though. I don't know if it's because we have entrenched directors who are good and are happy with where they're at, but I haven't seen it on too many occasions.
What we usually do with the Cancer Center cores is that we appoint a director and a co-director. So if one does happen to leave, there's some continuity within the system. Replacing those, usually we will go through and, look at, the faculty that, use the resource most, frequently, and then sort of, propose to them that, do they want a leadership role within a core facility, and so on. So it's, there's no really outside recruitment. It's all mostly internal, but like I said, a lot of the cores will have a director and a co-director. And sometimes, like for example, with our experimental irradiator core, we have one of the directors is a physicist who really works both on the clinical and on the research side. The co-director is a radiation oncologist that deals mostly with cellular and molecular issues in her research. So she brings to the table, another perspective, but together, if for some reason one was to leave and the other, there would be that continuity, so.
I can tell you that I've experienced a lot of those same things, but what I saw one time, and this was disturbing, was to see a core go into a death spiral. We had an exceptional director, and then junior took over, and then someone even more junior, and you watched all of the faculty members go elsewhere because quality was affected.
Susanna Perkins, UMass Medical School. I actually have a comment on the service contract piece that was a couple questions ago. We actually, when the quotes come in, they go to the core director, and the core director usually is maintaining the relationship with the manufacturer. But we actually play at UMass a good cop, bad cop thing with our central office. So when the core director gets their quote in, if we're aware of any issues, which this just happened last month with downtime and lost revenue, then our office goes back and pushes back on the manufacturer, and we get, actually we ended up with 15% off the last contract due to providing data saying that we lost all this revenue because of downtime or field service people not getting there on time. So we try and shield the director from having to deal with any bad conversations. So we really use a central office for that. And a lot of people don't think they can get things knocked off, but you can. Just negotiate hard.
Yeah.
Hi, it's very nice presentations. Thank you for that. My question is about authority and decision-making. So my institution, UCSF, is very siloed. And so when people have come to me with ideas for setting up new cores, and I've advised them against it, or I've advised them that maybe they should join together with an existing core rather than set up a whole new structure, oftentimes I get pushback, which is political or self-interest. But I don't have any power to stop them doing what they want to do. And they can go ahead and set up a new core that sometimes competes with another existing core. So how do you guys deal with that situation?
I talked about how things were 15 years ago at Johns Hopkins. 15 years ago, that would have happened. Somebody would have done their own thing, and then we would have had the consequences afterwards and the cleanup afterwards. Anybody who wants to start a new core, regardless, and you brought up a very good point. We sometimes, if it's a very small core or a core that could potentially complement another one in the same department, we will try to align them and see if we can create a larger core, because that really supports the mission of the department, the institution, et cetera. That way we have economies of scale as well. So we're not having a small one sitting out to the side right next to a larger one where it really could have been accommodated. We actually have established a hierarchy of approval. So if you are starting any core at all, we basically request a couple of things. One is that business plan and the request for approval to start a core, and it gets reviewed by myself, the vice dean, and the business office, and that committee that I mentioned. So you can see there's a lot of people that have a set of eyes on that, and ultimately we can either say yes or no. And also, if there's a need for it, we certainly will support that. I will say, I've been in my role almost 2 years now, and I probably have about 8 cores that tried to start up. Only 2 went through. The reason why is because once you really start to tell them about the uniform guidance, the responsibilities of the core members and the director and what they're signing up for, a lot of times they fall.
That's my first strategy, to
Yep.
let them know how complicated it is, and then oftentimes they'll back off. But
Yep,
it does still happen.
Exactly. So really what it is full disclosure of what they're getting themselves into, and then their small little thing that they really wanted to do, unfortunately, is not worth the investment that they have in creating a whole core structure, et cetera. So.
I could talk about this for a long time, but I'll just say one thing. Our compliance office that reviews the approval of a new recharge, which you need to do to create a core, they have one question that's really important, and it's, what is the chart string or the account that backs up your core if you lose money? And when the department that this thing's going to be proposed in sees that they're on the hook for any deficit, it often puts a stop to a lot of conversations for people that have ideas about this sort of thing. So I think that that's a useful thing to say, who's on the hook when it doesn't work. The other thing there's a sort of a concomitant problem, which is the existence of duplicity before we got our act together as a university really overseeing cores, and where there's there were 6 flow cytometry cores or more than that. The answer there is just don't provide them with central institutional funding anymore, and eventually the problem will solve itself.
Although we don't have central institutional funding to start with, they just accumulate deficits. But I like your strategy about asking for the chart string to prevent. That's a good one.
So I'm Andy Ott. I'm the director of cores at Northwestern, and I also run a core. And I had a question about, as the director of cores, I really like the idea of the departments supporting the business admin and website development and things like that. As a core director, I feel like that's an unfunded mandate, and the department doesn't know how to do finances for a core and doesn't know how to design a website for a core. Has Johns Hopkins looked at providing central support for those types of activities that are pretty core specific?
Great question. How do we train the departments to help you all effectively? And do we provide support for them? We actually have a new training program in the works. We're running a pilot in May or June for one of the departments to train those individuals who might be budget analysts or administrators in the department on the rules and the uniform guidance guidelines so that they can more effectively help the cores. I think right now at Johns Hopkins, it's hit or miss depending what department you go into. So Jeff is in oncology, where they have the cancer center cores. I think they are probably superstars at this, and they could jump in and help out those cores. If you went to another department, let's say radiology, they're deficient. They don't know, and they would probably be fumbling around and potentially get in the way of helping you out, and you would know a lot more than them.
I would think Aaron would tell you that he spends a lot of time training individual departments, and then that person leaves
Yep.
and moves on, and it's a treadmill.
Just want to make one further comment that Sean alluded to with this training program. It not only includes the administrative side, but the science side of a core facility. So they're also included in this training, and the managers and the directors, and it's really strongly encouraged that they attend these things so that there is that understanding on both sides of what it takes to run a core and all of the mechanisms that are involved in doing such. So. Is that it? Thank you, everybody. It's lunchtime.